Welcome to the X Project podcast. This is a podcast of the X Project Substack. To subscribe, please go to thexproject.substack.com. Navigating the Golden Tide, a summary of the World Gold Council's report, Gold Demand Trends Full Year and Q4 2023, article number 31. First, a note for podcast listeners. This article contains a number of important charts and graphs. If you are not driving, you may want to open the article to scroll through to the charts to view while you listen. Again, only if it is safe for you to do so. In this article, the X Project will answer these questions. Why this article now? What is the World Gold Council? Where is this perspective coming from? What is the top takeaway from this perspective? What is another top takeaway? What is the third top takeaway? What is the fourth top takeaway? What is the fifth top takeaway? What does the X Project guy have to say? And as always, why should you care? Section 1. Why this article now? In a year marked by economic fluctuations and geopolitical uncertainties, gold has once again proven its mettle as a safe haven and strategic asset. The analysis of gold demand trends full year in Q4 2023 reveals critical insights into the global economic landscape, investor behavior, and central bank strategies. With gold prices recently reaching record highs, understanding the forces at play offers valuable lessons for investors, policymakers, and market enthusiasts alike. It was the first week of December that the X Project published gold prices are at new all-time highs. Why now, and what does it possibly mean? Article number 13. Discussing the price event and providing a primer on the gold market. If you missed it before, you should read or listen to it now. Since originally trading at the new all-time high price of $2,071 per ounce on December 1st, 2023, gold prices retreated to a low price of $1,979 on December 12th, 2023, before rebounding to another new all-time high price of $2,077 on December 27th. On this past Friday, December 2nd, 2024, on this past Friday, February 2nd, 2024, gold prices closed at $2,042 per ounce. Section 2. What is the World Gold Council? According to Wikipedia, the World Gold Council is the market development organization for the gold industry. It works across all parts of the industry, from gold mining to investment, with the aim of stimulating and sustaining demand for gold. It frequently publishes research advocating for gold as a preserver of wealth. It also provides analysis of the industry, offering insights into the drivers of gold demand. It has also launched various products such as the Spider Gold Shares ETF and gold accumulation plans in India and China. The World Gold Council is an association whose members comprise the world's leading gold mining companies. It helps to support its members to mine in a responsible way and develop the conflict-free gold standard. Headquartered in London, UK, it has offices in India, China, Singapore, and the United States. Section 3. Where is this perspective coming from? On January 31st, 2024, the World Gold Council published the 27-page Gold Demand Trends Full Year in Q4 2023 report and published it on their website at the link found here in the printed article. Section 4. What is the top takeaway from this report? Colossal central bank gold buying continued in 2023. Central banks continued their robust purchasing of gold, nearly matching the record high of 2022. This relentless accumulation underscores gold's enduring appeal as a reserve asset amidst global financial instability. The strategic significance of gold for central banks highlights a concerted move towards diversification and a hedge against currency devaluation and inflation, signaling a deeper geopolitical and economic strategy at play. Quote, the vast majority of purchases continue to come from emerging market central banks, many of whom have been regular buyers in recent years. The People's Bank of China regained the crown for the largest single gold buyer. It reported a total rise of 225 tons in its gold reserves over the year. This makes 2023 the country's highest single year of reported addition since at least 1977. As a result, PBOC gold reserves now stand at 2,235 tons, although this still represents only 4% of China's vast international reserves. End quote. Section 5. What is another top takeaway? Jewelry demand firm in the face of record gold prices. The resilience of gold jewelry demand, even amidst skyrocketing prices, paints a picture of cultural and economic steadfastness, particularly in key markets like China and India, which together account for more than half of jewelry demand. This trend not only reflects the intrinsic value ascribed to gold in these cultures, but also signals a broader economic recovery and consumer confidence post-pandemic. The stability in jewelry demand amidst such high prices underscores gold's dual role as both an investment and a cultural staple. What is a third takeaway? Investment demand decline led by ETF outflows. The significant outflows from gold ETFs for the third consecutive year, juxtaposed with a modest decline in but still solid demand for physical gold in the form of bars and coins, illustrate a shifting landscape in investor sentiment and strategy. This next point is very important. This pivot towards tangible assets suggests a search for security and tangibility in investments, possibly driven by a lack of confidence in traditional financial systems and concerns over economic volatility. Section 7. What is a fourth takeaway? Strong gold prices indicate robust demand. The remarkable strength of the gold price throughout 2023, setting both yearly and end-of-year records, signals a robust demand across various sectors despite the economic uncertainties. The London Bullion Market Association, or LBMA, gold price ended 2023 at $2,078.4 per ounce, a record high year-end close, generating an annual return of 15%. The LBMA average 2023 gold price of $1,940.50 per ounce also a record, was 8% higher than 2022. The price resilience is a testament to gold's role as a hedge against inflation, a safe haven in times of geopolitical stress, and a diversification tool in investment portfolios. The dynamics of the gold market in 2023 reflect broader themes of seeking stability in uncertain times. Section 8. What is a fifth takeaway? The 2024 outlook. The outlook for 2024 suggests continued complex interplay between various factors influencing gold demand and supply. Anticipated central bank buying, shifts in jewelry demand due to economic pressures, and evolving investment strategies all play into forecasts that maintain gold's prominence on the global stage. Quote, total investment, including over-the-counter, likely to be higher in 2024, but akin to the market behavior last year, much of this demand could come from the less visible over-the-counter segment, which adds a level of uncertainty. Early continued weakness in global gold ETFs is likely to see a turnaround by mid-year, aided by anticipated rate cuts and continued geopolitical risk. European ETF outflows are likely to continue until longer maturity interest rates are on a firm path lower. But even here, regional politics, alongside geopolitics, could shake things up. Bar and coin demand is likely to stay healthy and in line with the 10-year average, as Chinese and Indian demand strength offsets European weakness. Central banks to keep buying at an impressive rate, likely in excess of the pre-2022 annual average of around 500 tons. They almost matched their 2022 total last year, and we believe that a longer-term strategy is at play here and err on being more open-minded to another solid year of buying, albeit somewhat lower than this year. Jewelry demand may struggle to remain lofty as economic slowdowns and high gold prices start to bite. However, should inflation drop significantly, consumers might start to feel wealthier in real terms, which could mitigate some of the drop in demand. Technology demand is expected to benefit from strong positive guidance on semiconductors and from AI fever. Total supply to rise with planned expansions and higher grades taking primary production to new highs, although a downside risk from disruptions remains a factor as always. Recycling is expected to rise, but not materially, as an economic recovery helped by stimulus measures in China could stymie overall recycling activity there. Elsewhere, economic resilience and a possible geopolitical premium should help contain volumes. This status quo is on somewhat thin ice, however, as many economies are set to slow further. In addition, the bar to recycle, given elevated geopolitical tensions, is likely higher even in the face of high prices. End quote. The nuanced understanding of these trends is crucial for navigating the future of gold investments and the broader economic implications. Section 9. What does the X Project guy have to say? First, I want to thank all subscribers, mostly free and some paid, who have signed up thus far. Gaining additional subscribers every day at this point is a strong vote of confidence that continues to propel the X Project forward. Substack tells me that nearly 2/3 of you have a 4-star or 5-star activity rating, meaning you are consistently engaging with my content, which is great. Please hit the heart icon indicating you like the article. The more likes I get, the more Substack will promote my content within the Substack community. If you don't like my content, for any reason or have any suggestions, please email me at thexprojectguy@gmail.com. Second, I am now going to share a part of what I wrote in section 10, which is behind the paywall and therefore only visible to paid subscribers, from my prior article number 30 summarizing the book Money and Empire. Quote, I agree with Luke Roman that we are in the midst of the first Western sovereign debt bubble bursting in over 100 years. See article number 27 for more on this topic. Of course, the Fed and U.S. Treasury will do everything possible to save the U.S. Treasury market, which means they will ultimately sacrifice the U.S. dollar by monetizing the debt and attempting to inflate the debt away. Will they succeed? Or will the US dollar bubble they are inflating first burst? I really don't know the answer to that question. But it is because of this question and the binary outcome of either persistently higher inflation for a lot longer, or worse, the end of the US dollar and all other fiat currencies, that I currently hold 2.5% of my net worth in physical gold in my possession, and why I am continuing to accumulate gold and aiming for at least 5% and hopefully as much as 10% within a year. This binary outcome is the biggest risk to everything I have accumulated in my life. And owning gold is my highest conviction investment thesis. More speculatively, I also have about 0.5% of my net worth invested in gold and silver mining companies, with half in blue chip miners and half in junior miners. I will be adding to those positions and looking to bring that allocation up to at least 1% and hopefully 2.5% of my total net worth. If we get a recession and a sharp pullback in the equity market, then it is likely both gold and miners will go down as well. And that is why I also have a large cash and short-term US Treasury bill position, so I can take advantage of that opportunity should it come to pass. End quote. In the next section, I'm going to share how and where I buy my gold coins and bars. However, the X Project now requires you to be a paid subscriber to view the final section. In a few articles, the paywall will move up within the article so that only paid subscribers will see the last two sections, or rather, free subscribers will only see the first 8 sections. I will be moving the paywall up every few weeks, so ultimately free subscribers will only see the first 4 or 5 sections of each article. Please consider a paid subscription. All paid subscriptions come with a 14-day free trial, and you can cancel at any time. Every month, for the cost of 2 cups of coffee, the X Project will deliver 2 articles per week, helping you know in 1 to 2 hours of your time per month what you need to know about our changing world at the intersection of commodities, demographics, economics, energy, geopolitics, government debt and deficits, interest rates, markets, and money. You can also earn free paid subscription months by referring your friends. If your referrals sign up for a free subscription, you get 1 month of free paid subscription for 1 referral, 6 months of free paid subscription for 3 referrals, and 12 months of free paid subscription for 5 referrals. So please refer your friends. Thank you. This concludes the X Project's podcast number 31. Please subscribe to the X Project Substack at thexproject.substack.com.